Hello, welcome back to another video. Today's video, I'm going to be sharing with you my outlook on the dollar index 10-year US bonds EGU. First things first, let's actually start off with our analysis on the dollar index yearly time frame. So keeping it simple, where market participants chose to trade prices in our current yearly candle. Quite simply, we've just seen strong lower prices from the dollar index. Now, this becomes significant when we actually reach our significant levels of liquidity and inefficiency in price. Now, as you can see, we're currently actually trading in these sort of prices as of now. Okay, so we've actually mitigated our previous yearly low and currently now trading in our yearly fair value gap. Meaning more likely than not, either in this week or the upcoming, we are going to see this reversal point potentially be put in our yearly fair value gap here, and this is where we're going to start to see that retrace on our higher time frame back into this leg of the yearly candle. Refining this a little bit more on our monthly time frame, we can actually see the completion of our AMD framework. So in our previous week, we had this range of consolidation here, we had manipulation to the upside here, and then we've seen completion of this framework via the expansion to the downside, actually mitigating this yearly fair value gap. Adding to the likelihood that more likely than not we are going to see some sort of reverse back into the leg. Now, keeping it simple as well, on our weekly time frame, at some point in either this week or the upcoming weeks, we are going to see run back into this leg, meaning more likely than not, the first level of liquidity that is going to be strong drawn liquidity is going to be our weekly fair value gap here. Now, what many of you will be wondering is, when does this drawn liquidity actually likely that a run is going to be probable, and when will it be predictable to actually take advantage of it in the first place? Now, this comes down to the economic calendar. So you can see this week on Monday, Tuesday, we actually have no significant USD drivers or GU drivers, meaning more likely than not we are going to see this range of consolidation actually present itself with a probable condition, with sort of an unpredictable manner, the way our intraday sessions are actually going to materialize. Now, Wednesday is when we actually get our significant news drivers actually coming into play, meaning this is where want to be aligning time with price. So as you can see, as of now, you can see that our daily fair value gap is going to be likely that it is going to present itself. Meaning, as of now, in current live time, what is probable, we actually have our manipulation by our news drivers to the upside, and then we start to see potentially our framework present itself, where we could see a run for internal here. And from here, we'll obviously assess if a reversal is likely and how market participants choose to trade. However, just because as of now, this sort of manipulation to the upside into our daily fair value gap is likely, we also have to take into consideration is the overall significance of this leg and the change in price lower for the dollar index. Meaning more likely than not, at some point, equilibrium will be in the market, meaning a run higher for prices into our significant levels of liquidity, such as our weekly fair value gap, our weekly breaker block here, is going to be extremely likely. Now, this drawn liquidity, this weekly fair value gap, becomes likely and predictable that it is going to be ran for if say we get our manipulation to the downside from drivers on the Wednesday, and then from here straight away our candle is going to be like this on our 4 hour, and we start to actually see the displacement higher. And what I'll actually be looking for if I'm looking to get into trade, looking to target the fair value gap, is disrespecting on the opening gap here. Now, what will be likely if we do disrespect this see a big push to the upside, displacement, and then we'll get our retracement to the downside. Here we'll assess how market participants are actually to trade. And then from here, we'll potentially start to see a run higher. And then from this point here, when we'll start to see a push up, and if we start to see the push up, this is when it's going to be likely that this week's fair value gap is going to run for. But okay, keeping it simple, as of now, what I'm still favouring is run for this daily fair value gap tomorrow. Align with our news drivers, then continuating our lower prices on the dollar index. So a quick look at our analysis on the US 10-year. We can see that in our previous week, market participants have chosen to actually make a push higher of our 10-year, meaning more likely than not, okay, going into this trading week, higher prices is somewhat likely. However, what we actually do have to take into consideration is our engineering of liquidity to the lowest here. Okay, so we may start to see, chop, range of consolidation, unpredictable price action, and then once our news drivers come into play, this is where we may see this run to the lows, and then from here, obviously, not a crystal ball, but this is where we'll start to see some sort of range of consolidation, and then price will then seek its next level of significant liquidity in live time. Very similar for EU and GU, just obviously in the dollar index. Okay, what's likely to present itself is going to be that retracement lower, and then as of now, potentially we're going to start to see, in the upcoming days, for this daily fair value gap, get our manipulation. If our low of the week is clear, this is where I'll look to take it off the highs. However, okay, on a more, on the lower time frame and more fine point, going into today's trading day, what is likely as of now, it's going to be that retracement lower. See, we've actually got S&P's high here on EU and GU, meaning a run for our 4-hour fair value gap could be somewhat likely. Now, if we actually look to disrespect our 4-hour fair value gap here, this is where it aligns with the dollar index. That here, we'll assess how market participants are using trade prices here. If we start to see displacement prices, this is where we'll do get into a trade actually targeting our weekly fair value gap aligned with the dollar index, and obviously very, very similar for GU. So thank you very much if you did watch this video and get up to this point, and I will be dropping my trade review from our previous week in another video. This video will get dropped later today.